I'm going to do another technical indicator, and the one that I'm going to talk about today is called the accumulation distribution line, ADL. It's a volume-based indicator as well as a price-based indicator. So actually using price and volume to come up with a value that you then use to actually see a trend or not see a trend. So it combines price and volume, and it's also cumulative. So depending on whatever period you're looking at, if it's 1 year, 2 years, or multiple years, more than two. It's going to start with an initial value, and then from that initial value, you'll keep changing it until you get to the current time or current date. Um, and it's got a calculation, a couple of calculations that you make on it. So the first one, the first calculation is actually, let me get to that. So if you look at the numerator, it's going to be close minus low minus the high minus close. And those two are actually in their own parentheses. And then you have that divided by high minus low. And so the key here is that when that ratio is when the basically the close is very close to the high, then you're going to end up most likely with a positive ratio. But when that close is actually very far away from the high, then you're going to end up with a negative, most likely a negative ratio. Okay, and that has a huge impact in how you actually add it back to the moving trend part of the indicator. And the MFV is actually calculated by using the MFM times the volume. Okay, so if the FFM is zero point 0.5 and the volume is 100,000, and the MFV is going to be essentially 50,000. And the ADL line, the actual ADL line is equals the previous day's ADL plus the current MFV. And you do this for every single day. So for whatever period you're looking at, if it's again, if it's a year or multiple years, you're going to be doing for every single day. And you'll see a trend that goes up and down, and there's going to be volatility to that trend. And what you're going to be looking for is changes that are actually moving in the positive direction. Because if the actual value is going up, um, then that's a good sign because there's a strong conviction from the buying side. People are actually buying the security. They want to accumulate the security, and you should see that closing price moving closer each day, basically within each day. When it closes, should be closer to the highs. If there's a distribution, if there's more selling of the security, then you're going to be seeing the close actually being closer to the lows, and that's not a good sign. So there's not as much conviction behind the security. And again, it's very positive. It's a very good technical indicator. I like to use it, but not on its own. I like to use it with other indicators, and you should too. And you can actually look and get this indicator in most platforms out there. Actually, it's a pretty common indicator. Um, but if you're looking at tons of data, tons of securities, and obviously gets a little bit more complicated. But I like to use it within my some of my own models in combination with other indicators as well as other information and data. And it's really good to basically to corroborate basically what you're seeing from other indicators or from other analysis. If the prices are moving up and the ADL line is also moving up, that's a good. That's you're getting a confirmation basically that there is a strong bias towards the buying of the security, which is driving up the price. If the price is going up and the ADL line is actually moving down, then there's a divergence there. So that price movement may not be as strong as what you might think, and at some point there might be a breakdown where there's going to be some large selling. Um, of the security. So again, it's a great indicator. I like it. It's got some power to it, just like all the other indicators, but never use it on its own. Use it in combination with other indicators, as well as other information and other, uh, and other analysis that you do on the data, especially fundamental analysis. You should never do anything just based on technical indicators. If you're looking at something very short term, then yeah, there is good strength in using the technical indicators. When you're looking at something a little bit longer than just a few days, and uh, you should be doing more of the fundamental analysis. All right, thank you. We'll talk about another indicator the next time.